In this video, traders, we're going to look at how to reverse engineer your great trades to find the next fertile trading environment. This is to try to stop you giving back all your gains when you've made good progress. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so I believe that many traders could do so much better, and I know myself, as soon as I kind of got a grip on this and got a much better handle and control, it improved my trading dramatically. But I think that a lot of traders could do so much better if they only traded it in the environment that was suitable for them, their setups, their style, all that kind of stuff. So for example, maybe not to draw on the board, but if you are very good in a volatile environment, swings high, swing lows, etc., then you need to try to find those volatile environments. If you're very good in trading environments, etc. Now, many traders don't know this. Many traders, maybe you've not been trading for very long, you don't know what you're good at. So what you need to do, or what you can do, you don't need to do anything, but what I suggest you do is that you go back, and if you've got a log of stuff, then great, you should have. If you don't, spend the time to print off the charts for the market conditions, or for the environment, if you like, that you had a very good run with, or when you had a very good trading outcomes, and when your P&L was rising, equity curve was rising, all that kind of good stuff. And what you want to do then is go, right, well, these were the times when the conditions were really good and I made some good money. Now, what is the common theme between this? And what you can do here is, first of all, you go, right, well, it's obvious it was a down, these were down days. You might not even know that. Well, I'm very good on the short side. Okay, that's a good start, and that's very simple to implement. Only trade short side on heavy down days. Okay, but what about if you were trading well when there's really good volatility? Okay, so if it's a very simple one, but it's very often the case. So what can you do in future to make sure that you're only trading those conditions? Now, obviously you can just use your eyes and go, right, well, I think it's volatile, but that's often not enough, because we override ourselves, we make excuses, we do this, do that. We're human, guys. We break rules. That's kind of what traders do, unless we reinforce the behavior and add things in to not break the rules. So what we can do is then we can go and we can start to plot some indicators on the chart. So stuff like our average true range. What was the average true range in the fertile periods that I traded? Average true range, the daily range was 150 pips if you're trading currency, or it's 200 points if I'm trading a Dow, or whatever it may be. You start to then get some metrics and you start to get some rules. So your rules then say something like, right, I only want to trade when we've got an average true range of more than 150 pips on the day. Okay, why? Because actually, when you look back at my winning trades and kind of sequence of winning trades, it's always in that environment. And if you want to go one step further, you can take your losing trades and go, well, actually, the losing trades were when we were less than 50 pips range, for example. So now you're seeing a pattern and you're starting to see stuff that's working. Okay, so what else have we got? Well, actually as well, the volume was running at whatever metric your volume is for the market you're trading. Let's just use 1 million shares, for example, right? Let's say with shares, it could be contracts, could be units or whatever. Okay, that's a good thing. When we've got an average volume in the day of that, then I do well. The average volatility of that, I do well. Okay, now what else can I add? Well, I can add stuff like an ADX, trending. I can go on and on and on. But the point is that I'm reverse engineering what I'm good at to find out when I should be trading again. And this is super simple, but it's super effective. You get the charts, you stick on some indicators, or you look at some of the stuff that maybe you've got indicators on already. Maybe you've got Bollinger Bands on it, maybe you've got RSI on it, maybe you've got moving averages, whatever. Is there a theme in that I can take and implement as rules to, number one, stop me from getting involved in markets that really aren't suitable for me, that really not only damage my pocketbook, but also damage my confidence and my mindset? And that's a great win. And also, of course, you get involved when the markets are more aligned with your ability to produce profits. And so it's a win-win all round. And it's such a simple thing, and there's such a theme there that we don't know. We don't know because we're putting the journals away, we're not looking at them, but there's something that literally is like a diamond. If you go through it and look at it, it's like, hey, I make most of my money on short side days for whatever, volatile short environments, and when I make 80% of my profits. Right, so does that not make sense to be sure that you're trading as much size as you can within your risk parameters under those conditions, and maybe not trading at all, or at least dialing the size right down when you don't have those conditions. You know, you don't have to not trade at all. You know, because sometimes you want to be in tune and all this kind of stuff. I understand that, but you're not going to go start pushing a full boat around when conditions aren't as good as they could be, because you just know you've got proof, you've got logical proof to back it up. And so reverse engineering your trades, guys, is super useful. It's easy to do, takes you a few hours maybe, if that. But then you create those filters, then you know that you're confident that, hey, this is the right environment for me. This is the most fertile environment for me to make money with my strategy. Yes, tick, tick, tick. Off we go. We're matching the criteria that I've got. Let's trade. Let's see what the outcome is. Far more control over when you trade. Far more of a professional approach. Worth checking out. Take care. Bye-bye.